All right, good morning. Today is June 9th, 2021, and I'm back with another Wednesday live show. Hope everybody's doing well. The market itself has been relatively dull and basically in sort of a sideways range now for quite some time. And so tomorrow, I suppose, is the big day because the CPI, the inflation number is going to come out, and that's going to sort of set the tone, I suppose, for going forward because the market can't possibly stay trapped in this little range. Interestingly enough, the S&P like his his right up against the all-time highs, right? I think that well, I know that earlier this morning it was basically if it had closed, where it was around the open, it would have been the all-time high. So there's the SPY. And the reason that I wanted to show the SPY is so I could zoom into, well, let's see. Let's see what an hourly chart looks like. I mean, there's been a couple of little dips there, but it's I guess the hourly chart is not a really good example so much as the daily chart, but yeah, this kind of sideways range here. Now, of course, it's broken out to the upper end of the sideways range, but you can kind of see that, other than these two dips here, at least for the past couple of weeks here, it's just been really in kind of a small range, pushed right up against the highs, right? I mean, it just looks like it wants to break out to the upside. You got kind of a flat top going there, and well, let's look at the SPX. That gives a little bit better of a view of it, I guess. There you go. So, yeah, I mean, you talk about sort of a flat top, right? And at one point this morning, it doesn't even look like it on this chart, but I know for a fact. Oh, there you go. Yeah, so this morning, like right after the open, there was a little pop up that was above this prior closing. There's the closing high right there on 5.7. So anyway, I mean, a couple of points, a couple of pixels doesn't really mean anything, but you can see how the market's just sort of, trapped in this kind of range here. There's no trend right now, I suppose you could say. There was a couple little dips there for a couple days, right back up. So, I mean, it really looks like it wants to break out. It's going to be interesting to see what kind of follow through there is because the trading has been extremely light volume and relatively dull. There's been a couple of longer range days, I would say, but some of these ranges here, right? Of course, we did have the Memorial Day holiday weekend, and so I think that probably contributed to a couple of prior to that Thursday and Friday there was no range, but the market is just kind of stuck up here, and so it'll be interesting to see what happens. Like if it breaks out, if it can trend again, right? So this 4,200 level goes all the way back to goes all the way back to about, well, right around here. We practically hit 4,200 back in mid-April, and here we are, approaching mid-June. So 2 months of, and you could even look at this range, this whole range right here, and say, from these lows to up here, that's a pretty big trading range that goes all the way back to, the beginning of April. So we're a couple of months in a relatively, I would say relatively, there's a little bit of a trend that got us up there, but it's been kind of dull. And so something needs to give, right? Something needs to give. The Qs, NASDAQ 100, really close to the all-time highs. You can see that last time it sort of got stuck in a sideways range. There was a little dip afterwards, and so it's trying to battle back up there. I mean, the market's, it's basically 1 or 2 days away from like really busting out and doing something, but um, it seems like no one wants to buy yet or something. I don't know exactly what's going on. Of course, under the surface, it's a whole different story. There's a lot of volatile stocks and sectors on a day-to-day basis. The Russell 2000 is actually a little bit more volatile. It's right up against the highs too. Had a couple of pretty decent up days, but I mean it's still in this big sort of choppy sideways range, and so recently, when these markets get up to the upper end of the range, they've been selling down towards, selling down a little bit. And so it feels like the summer doldrums are here already, but hopefully, honestly, it doesn't matter to me which way it goes. I just want to see some trending price action, I'd like to see it, bust out and, take another leg up, kind of like this, or do something, you know. This trend line, still pretty steep here, and so if we get any sort of crazy bad news or whatever, if and when this trend line breaks, I mean that would be the first caution sign, I would say, and the trend line, the way that the market's been kind of moving sideways, you can see this trend line is catching up to the price action. So, I mean, obviously, if this trend line gets broken way up here out in the future, there's all these areas of support. So, all is not necessarily lost, but you know, the funny thing is that this current rally, that basically, the current trend line that basically goes all the way back to these lows here is, kind of reminds me of this one just on a bigger scale. So, but for whatever reason, the market just seems to be just hanging out here right below the all-time highs. What would be probably the most frustrating thing that could happen, would be like just sort of a nominal breakout, a couple of new highs, and then a sell-off right back into the range. So, but that wouldn't surprise me, just because it seems like everything's sort of on hold. So theoretically, tomorrow's CPI number may, may light a fire under it, either way, good or bad. So, I mean, that's the whole thing now. The whole argument is, inflation's heating up. The Fed said that they're gonna, obviously they're gonna keep interest rates low, but everybody's concerned now when they're gonna start tapering their, QE, their bond purchases, and all this kind of stuff. So, I mean, Fed, you guys have seen the charts with the money supply and all this money they're creating out of thin air that theoretically is driving these assets up. So valuations in the market are extended by, I mean, the valuations are high by any historical measure. And so it is what it is. But like I said before, everything is sort of under the surface, like the old saying goes, it's a market of stocks. And just so happens we got some semiconductor stocks that are open positions. So we got a little bit of everything, but a few of these things are semiconductor stocks, which has just had a pretty nice upcycle, quite frankly, and just kind of hanging out there. So I figured what we'd do is, like normal, go through these open trades here. We just had one closed for earnings. It was funny how this works. MRVL, right? MRVL got closed this day right here. That was on 6/7, ahead of earnings. And the funny thing is, when they came out with earnings, initially I believe I saw it after the bell, it was down, and then of course by the next morning it had that big pop there. So, but it still turned out okay, right? The thing about holding over earnings is, for every big pop you get like this, you also get one that gaps way down. And so just no edge in holding over earnings. And so we figured that when we initially set this thing up, that was one of the that was one of the rules that we decided on, is that we would sell ahead of earnings, and it's worked out pretty well so far. But and I've seen tons of these too, by the way. Where we close the position ahead of earnings, and then you get this type of move. So, but anyway, it is what it is, and no big deal. So let's take a look at. We'll start at the newest ones. We'll start at the newest one first, which is this CYTK, and there you go. I have to squeeze the chart up because the initial stop is like, it triggered in on this big long range day up here, and so it kind of makes sense to have the initial stop right down there. And so yesterday at the open, it would have triggered in here, which was, let me see what that open was here. Just a little tiny bit above the open was 22.29. So, and I mean basically, if you closed your eyes and counted to 10 and bought it at the open yesterday, you might have got filled for, anywhere around there. So no big deal. Yeah, occasionally it's nice to see one that actually triggers in, triggers in right around the trigger line without gapping up. So, here we go. There's the target. Sold down a little bit yesterday, but, it's when you get a big long range day like this, typically you do get some inside days. Other times they just blast off from that. So, a lot of times though, a day like that will sort of mark the bottom of a cycle, right? Especially after a pretty decent sell-off like that. So, looking pretty good here. Today's price action is basically right around this. So, I mean, it's only been open for a day, so no big deal. Looking okay here. Looking like at least a potential rally up to, this looks like about 3/4 of the way up of this last sell-off here. So this is a biotech stock, so it's kind of nice to it's nice to have one that's not, a semiconductor. This little channel down here looks a little similar to this one, which, ended up having a big rally. So everything about this looks pretty good. As I recall, when we were actually looking at this on the pending list, maybe a week or so ago, a couple weeks ago, it looked pretty good on the pending list too. You zoom out on the chart, so it's looking okay here. As long as this low holds, everything looks good. So let's see, moving down the list here, the next one is this Shake Shack, which, man, this thing is volatile. On a day-to-day basis. Oh, look, it's actually, so today it's hitting the target. Perfect. What I noticed about Shake Shack is that these these days here, up, down, and that, I mean, these things were like, 3, 4, 5% days. So this thing has a pretty good range here. And I mean, look at yesterday. It went from, it was over a 5% move slightly. Or I'm sorry, yesterday, even the day before, so you had like a couple of 5% days in a row there. This thing really moves on a day-to-day basis. When it has a down day, it's significant, and when it has an up day, it's pretty significant. But there you go. So it's basically closed that gap, and this compensation target here. So it triggered in right here this day, and then the following day it gapped up, a little bit, $1.85, and that's what the C target is. The C target is just adding $1.85 to the opening price, which would have been, basically what you would have got in right around that opening price this day here. And so it, meandered, and it was kind of up and down, and it hung right around that trigger. The initial stop, I had the initial stop, and there was another stop at 85 here, but I must have forgot to save the chart. Well, that's what happened. I forgot to save the chart because all the other ones still have all my marks on there. But yeah, these stock charts are they're a little wacky because if you draw some stuff on here and then switch to another ticker symbol and forgot to click save and pick a watch list, then it just doesn't save it. It doesn't prompt you or anything. So I have to be careful about I have to be careful about saving my markups on these charts. So, but anyway, the trailing stop started off, or I'm sorry, the initial stop started off somewhere down here. I think right below this bar. I think right down here, just under these lows, and then then it was 85. It had moved up to 85, and then so now, as of last night, it's basically ratcheted up just a little bit under there, and so sitting pretty good. My guess is now that we got some forward progress and it's up here, hit the targets. My guess is it might move up a little bit. Probably it's hard for me to say. I mean, the system sort of has a mind of its own, and so theoretically, a stop just under this day, about 88, 88.20 would put it just under this day. Let's see, the low is 88.40, so sometimes it's hard to tell, but so the stop moving up to there would put it under like the last pivot low, but my guess is and that may happen tonight or whatever, but in the next few days, my guess is it's gonna tighten up even further. So, and of course, you can always use some discretion. It really sort of depends on how you view the position. I mean, if you're in here for like kind of quick in and out trades and that, obviously today's the day to be taking some profits, half off the table, and then it wouldn't be a huge big deal, honestly, to put that stop under yesterday's low. Now the system is designed so that it's going to try and keep us in for the bigger move, right? Without getting knocked out. And since this is pretty volatile, I mean, all it would take is a couple down days to take out yesterday's low. But I mean, there's still a lot of potential here, right? And that's why the trailing stop tends to hang back because it's trying to prevent us from getting knocked out. Only after a big giant extended move like something like this, it'll really start to tighten up, right? It'll get more aggressive as time and price go on, especially when it makes a really big move. So you guys have been around know what I'm talking about, right? Like you get a move like this, and then you start to get up, with something like that, and then you'll see it just tighten up like right up with the it's kind of like we have the parabolic stops, but it tightens up aggressively once you've had a parabolic move. So this is still early in the game here. Still a lot of potential here. And so, but my guess is this will come up at least a little bit tonight. And so, but I mean, hey, it started off a little bit rough, right? I mean, there was a few days where it just basically, let's see, 1, 2, 3, 4, 5, 6 days or whatever. It was just hanging right around the trigger price for 6 days after it triggered, and then finally, and then it was, over here it was starting to look a little sketchy. Sometimes they start that change in trend and then it just fails, right? So anyway, so far so good. Shake Shack looking pretty good. Um, Basically, it's basically flat today, but it has hit both or the target, so good enough to start off with. Intel, and I don't know why, for some reason, like the list here seems like look at the dates on this. Huh. Well, anyways, Intel is just like trading sideways here. I mean, this thing, this is kind of like, reminds me of the market almost. This is what the market sort of has been feels like the past couple of weeks, right? Kind of rallied up, and of course the market itself's up at the highs, but this Intel, I mean, it's just basically sort of in this little sideways pattern, and And its trailing stop is super tight right now. It's really tight, but it is what it is because the system is designed so that the losers are cut quickly and the winners run. And so I think it's programmed so that one of the first goals is to get that initial stop up as close to break even as possible, while still taking into account obviously the behavior of the stock. And so since this one traded sideways, put in a little pivot low right here and has come up a little bit, and so this stop is just under that pivot low based on the ATRs, and so it is what it is. So there's very, very little risk here. Um, and of course, Intel doesn't move a lot, right? It's got probably around a 2% average daily range. So it's not an extremely exciting stock, but also, it's not a risky stock, and that's where the range comes in, right? I mean, some of these things, like a Shake Shack, that probably moves around 5% on an average. The ATR is probably about 5% a day, as opposed to Intel, which is probably less than 2%, like 1.8 or 9 or something. So anyway, no big deal. Very little risk here. Just needs a little upside to get going. And yeah, bigger scheme of things, Intel had a huge run up, and then basically this sell-off occurred on earnings, right? And the earnings were probably decent. I mean, it's been a long time since I looked at the fundamentals of Intel, but I would say that it's probably a value stock, right? I mean, it's probably still got a low PE and earns good money and all that. And so whatever this miss was about here, whatever it sold down, probably was not that big of a deal. Um, hey, they talk about a chip shortage, right? That's the big thing now is semiconductor shortages and all that. So Intel's one of the while they're not, it's not as hot as like AMD or Nvidia or anything like that. It's sort of a bellwether chip stock. So anyway, so far so good on this. Not a huge amount of risk based on the new trailing stop, so I'm not going to worry about that. Moving on. Silicon Laboratories, another semiconductor stock. It's got kind of a much better looking chart. Um, Interestingly enough, this has got this sort of long range bottoming day. Kind of reminds me of the other one we were looking at. and and so it basically formed a low. So it's kind of an unusual kind of pattern, really. I see this long range day here, and then all these little inside days where it coiled up, and it looks like I mean, it looked like it would be really, really nice. It's just a really nice pattern for a breakout of that little pattern to the upside, which is basically where the trigger was. I mean, the trigger was in the ideal spot if I was just eyeballing this chart here. But what's wacky about it is how it opened down there below all this price action that day, and then came up. And so anyway, there was the day it triggered in. Well, actually, it triggered in at the open this day right here, but you can see I put the target, the compensation target, and it hit both of them and is just kind of hanging in there right now. So as of the close last night, this was up, just under 6%, right? As of last night's close, which is kind of back down here. So made a pretty good move, and so now it's just a matter of whether it can get something continuation move to the upside, or whether it's just going to kind of roll over and hit the trailing stop. But the fact that it hit the target is really what's important. So there was 3 days there where it was trading at the compensation target. I mean, it hit the actual target based on the trigger, but this C target is based on entering it this open here. So any way you slice it, it's a winner and looking pretty good. And that trailing stop, even with the compensation target, the trailing stop is sitting at break even for the other half of the position, so looking pretty good. Whoops, whatever I just clicked. I didn't mean to. All right, so let's see. Moving on. BRKS. BRKS. This is almost this is another semiconductor stock, and but I believe they're in semiconductor equipment manufacturing is what I'm thinking. But good looking chart. I mean, this is a strong stock any way you slice it, right? It's been rallying all year, but it did have this significant pullback, this sort of pullback here, and then I don't dare try and draw a trend line down across all these, but if I did, what you would see is that, well, actually maybe I will, just for the fun of it. I'm gonna just to sort of prove my point here. I'm getting a little bit better with these stock charts as far as that goes. So I have to click save up here, and then there we go. So, now it'll save that trend line close enough. What I've found with these stock charts, the hardest thing now is like if I want to adjust this trend line, that's the part that's a little bit weird. Because if I just grab it and try and move it or whatever, it opens the drawing tools automatically, and then a lot of times it'll put another start drawing a new trend line instead of adjusting that one. But I think you get the idea anyway. So this one triggered in over here and then had a gap up. The day that it closed above the trigger price, which is down here, was pretty significant distance. And so, well, two 291. I mean, not significant in the big scheme of things, and obviously talk about not sweating the small stuff. However, um, jeez, however, excuse me, it's hit the target based on the trigger price, but it did not hit the like the real life target theoretically, and it's starting to sell down a little bit. So, and quite honestly, I mean, it's just a little bit above where it actually triggered in. So we'll see what happens with this. Here's the thing is like I've seen this a lot of times, normal sort of little pullback or whatever, and then it can easily get something going to the upside and cut right back up. So, but there will be times where the trailing stop will kind of, the trailing stop, like I said before, is trying to get us to break even, you know, so it's trying to get up into the area of the actual trigger, and so, this could actually theoretically like come, a couple of bad days, like one more down day on top of today, you could tag that trailing stop, and then so basically be kind of a wash. Break-even trades are not a big deal. I believe, as a matter of fact, for as long as I can remember, Jeffrey is like a huge proponent of break-even trades or getting to break-even, and so, I mean, sometimes it's frustrating if you figure you've already got, the time and effort involved in taking a trade, and then having it close out at break even, or moving your stop to break even and then just having it tag in the stop is mentally is kind of not a good thing, right? Because you think, oh man, and then of course two things can happen after that. The stock takes off and does what you expected, and you turn around and it hits your break even stop and then goes right back up, or obviously it can hit your break even stop and then it goes down and you're glad you did. But I've found that like getting stopped out at break even can be a little bit frustrating. So it's something, but once you've removed all the risk, and see that's why having multiple open positions, you don't let any one position like sort of bug you, right? And quite frankly, like trading mechanically is honestly the way to go. Um, Over the years, I've figured out that what I mean, once you've been doing this long enough and you've made enough trades and you've got enough stocks in that, you really just have to approach it from sort of like you're trading with the system mechanically, and you don't let anything bother you because it seems like the rest of like the market participants, and I know you guys see it if you watch CNBC and follow the market. I mean, these people get so emotionally invested in their trades and investment. I mean, it's like it's the everything's going the opposite direction. I mean, all these the meme stocks and the crypto people in that. I mean, it's like they have like this sort of cultish relationship, an extreme emotional relationship with their investments, which seems like things are going in the wrong direction because the exact opposite of that is honestly the analytical and objective approach to investing is guaranteed is guaranteed to be better. That's what technical analysis is about, right? I mean, technical analysis is an analytical and objective approach to looking at a stock rather than using intuition and emotions and all that kind of stuff. So, but it seems like the investing world has moved in the opposite direction of that. So who knows? But last but not least on the list is good old Twitter, which quite frankly has a really nice bottoming pattern. It reminds me of I guess was it Shake Shack that had the gap and then the bottoming pattern and has moved up. It reminds me a little bit of that. So looking really good here on Twitter. I mean, this is a really nice sort of. And again, there was the earnings gap down after some volatility anyway. But I've seen this a lot of times. The earnings gap down, you sell down a little bit, and then when you get the change in trend, now that it's moved into the gap, that's pretty positive. And plus, of course, they've announced some stuff that theoretically could get the stock moving in the right direction. And we've talked about this, a few years back. Every other day there was like I mean, there was periods of time where they were talking about bidding wars between multiple companies buying Twitter out and all this kind of stuff, and I mean, they'd make a big deal about it, but Twitter never got bought out, obviously, although, it could potentially happen. But it's interesting to see that it's starting to recover after that big earnings gap, but it's a pretty nice pattern. I mean, you got a nice sort of change in trend here, and the fill would have been like yeah, right here about $55, right? So 53.50 was this price to beat. We call it the trigger price, but quite frankly, it could be called like the price barrier or whatever. I mean, that's really what it is. There's like a certain level that the system calculates, and that level, like if the stock can close over that level, that basically confirms that we have, reasonable expectation that, there's a potential change in trend. And so, I mean, that's basically what's happening here is the stock sold down, then it gapped down, and then basically, hit a low and some buying came in. And so you say, okay, is this a change in trend or not? And um, if I had well, I actually I have the RSI in this bottom panel here. Uh, in my other charts, I have MACD, histogram. Some of them I have stochastics, RSI. So you could line up a whole bunch of, indicators, oscillators in that, and use those to sort of help determine whether there's a valid change in trend. But that's kind of what the system's doing is it's using a bunch of programmed logic on the back end to calculate a level like this barrier level and say, okay, if the price can close over that level, then that's pretty reasonable potential for a change in trend. And so that's what the trigger price is all about. The trigger's not really designed so that like you want to enter, 1 penny above the trigger price. So anyway, long story short, you guys all know how this works. And Twitter, this is kind of what you want to see. Triggers in, and then within a couple of days, kind of pulls away from the trigger area, and then it traded sideways a little bit of pullback here, and so you can see, when it was trading up here, that initial stop moved up just a little bit, and then over here, probably one of these 2 days, trailing stop came up to essentially the area of the trigger, and then once it put in like this little pivot low and started moving away from that, that's where this trailing stop came up here. So everything looks basically just right on this chart, and so all we need is another dollar up in the next few days or whatever, puts it at the basically at the target, the compensation target to compensate for the gap, and so puts this one in the win column too. And the way that we originally designed the system was that you sell half at the target and let the other half ride with the trailing stop, and every now and then we latch on to one that makes a significant move. Significant. And so as of the close yesterday, Twitter was basically up 10% from the trigger price, so looking pretty good here. Not looking bad at all. As far as so that's it for the open trades. Everything looking okay. Um, the only one that's not doing anything has only been open for a day, so there's a few stocks sitting on the pending list here, and with the market kind of trading sideways like this, I know Jeffrey and I talked about this last week. With the market kind of trading sideways like this, there's not a whole lot of new stocks just popping up all over the place to hit the pending list. Although, some stock, but I looked through a bunch of charts and there's a whole lot of stocks out there that are actually in downtrends, right? I mean, they're just basically in primary downtrends. So I'm gonna say, well, I don't know. I'm gonna say, maybe a third to a half of just random stocks that you look at are down significantly. I always like to look at, just about every show I pull up this arc here as sort of a proxy for, the hot momentum stocks, and you can see over the past couple of weeks here, past few weeks, past month, ARC kind of, I mean, it had that brutal sell down and found some support around 100 and is sort of rallying back up. And so, I believe that Tesla is one of the charts look very similar, so I believe that Tesla is one of the major holdings in that. What's interesting about ARC is that, well, there's a lot of interesting things about it. For one thing, they publish their daily, buys and sells, but this ETF does an extraordinary amount of trading. I mean, every day there's like, a dozen stocks or more that they bought and sold, and and it's like they increase and decrease their positions, right? I don't really follow all that real closely, but 100% completely transparent as far as an ETF, and a whole lot of trading going on under the surface, and so it's just kind of interesting. But I kind of use it as a proxy for how well the momentum stocks are doing, right? And of course, everything, it's like the indexes, right? It's like if you talk about the S&P, we know that there's just a handful of stocks that comprise the majority of it. And so I believe that this is the same way. Their top holdings are going to have a huge influence on it. But anyhow, so that's that. We looked through all of the open trades. So far, so good. I think we have a pretty good amount number of open trades, and everything's looking okay. So I'm gonna go ahead and wrap this up. Thanks for tuning in, and I will see you again here next week.